What's up, everyone, and welcome to today's daily macro update for Wednesday, February 25th. No really big macro data releases, but the stock market is bouncing a little bit into NVIDIA earnings, Q4 NVIDIA earnings. Highly anticipated, right? It's the biggest stock in the stock market, and really its market cap is bigger than a lot of even developed nations. So this is a huge thing that comes around every quarter. NVIDIA earnings, that's after the bell rings here. So we got about 13 more minutes left in the market before close. And then typically it doesn't come out until 30 minutes or sometimes even an hour after that. So we'll be taking a look at NVIDIA as well as some of the other mega caps heading into the earnings report here today, as well as just kind of, take a look at the general reaction from other things that we've been long. But first, before we get into that, make sure you guys head over to our website to check out what we do. Interestingly, you guys will notice that we are now in a bullish trend. I actually forgot to change the color on the background there. But the S&P 500 is now in a bullish trend from neutral, which is pretty interesting there. Qs still remain bearish, but yeah, it is interesting seeing that rate of change there. But if you want to learn more about what we do, you can go to our website here. We have a couple products. One is if you just want the direct answers to the trading ranges as well as the trend for the top 14 index ETFs, including SPY, Qs, IWM every single day, along with Bitcoin, Amazon, all the Mag 7 stocks, right? Then you can subscribe to our daily macro vision. There's a 7-day free trial, and then it's just $49 a month. Or if you guys would like to learn more about our exact process so that you can implement and execute alongside myself and the rest of our team while you get access to the trading range model and some other perks, you can check out our 6-week macro mastery challenge, where for 6 weeks it's kind of like an execution accelerator, right? Because it's one thing to have all the information, it's a whole other thing to actually know how to act with all that information, right? Especially nowadays where it seems like we're just in this analysis paralysis type of environment. It's like, how do you filter through and just use the right information to make the right decisions more often than the wrong decisions, right? That's exactly what we help people do in our macro mastery challenge. And so if you guys want to apply for that to see if you qualify, you can just hit the apply button now and it'll take you to that page. And so, yeah, taking a look at NVIDIA today, it's having a pretty decent rally. NVIDIA is one of the only remaining top 10 stocks, or really Mag 7 stocks, that are in a bullish trend. Now, interestingly, it is rallying right towards the top end of the trading range here. And when we take a look at volume, it is pretty decent volume, but it is technically decelerating slightly, but still, you have a little bit of heightened volatility. You have, volume staying relatively strong. And so, yeah, I mean, if it closes over here, then we'll see what happens after earnings. But interestingly as well, you're hearing my cat right now. Hold on one second. Remy. He keeps on whining if he doesn't know where I'm at. But when taking a look at the historical versus implied volatility charts here, right now you can see that the 30-day implied volatility is much higher than the historical volatility measurement. And this is creating what's called an implied volatility premium. And so typically when you see implied volatility premiums, that is essentially market participants in the options market going or buying more puts rather than calls, meaning that they're betting more likely that Nvidia is going to come down or draw down in price rather than go up. But the only problem is that if you have all the crowded traders going and betting that Nvidia is going to go down and it goes the opposite direction, right? Let's say you get a little bit better of a earnings report and it goes up by like, let's just say like 2 or 3%, then that little increase in price will unwind a lot of those, put options. And then all those people will have to capitulate, which will then exacerbate the price acceleration. So that 2 to 3% pop could turn into like a 5 or 10% pop if all of those put options get unwound, right? So that's really what we're seeing here today. So I really wouldn't be surprised if we saw this, crank up a little bit more above the top end of the trading range. Not saying that will happen, and it's totally against our process to bet on those things before earnings because that's total just gambling, which I know some people end up doing. My team and I would personally not recommend doing that just because that's not prudent, right? You're basically just gambling. But I know that some people choose to use our process to do that anyway. And so at least they're doing that. But that's what I'm seeing here in terms of NVIDIA. You guys can go to their investor relations page in order to see the press release. What I typically like to do is I usually like to compare it to the previous quarter, right? Just to see what the quarter over quarter growth is. But also as well, I like to take a look at Q4 from the previous 2 years to get the 2 year stacked growth, right? And so, well, actually, I take that back. Well, I'll add to it. I like to take a look at the two previous quarters to see what the trend is, right? So let's take a look at Q3 2026 and Q2 2026. We'll see what those trends are at, right? So Q2 of 2026 revenue increased by 56%. Q3 of 2026 went up 62%, so that is a little bit of an increase there. Um, and then let's see. Gross margin was only up 2 points or almost 3 points year over year, while gross margin in Q2, no, that's let me see. Okay, so gross margin did decrease. So we got to take a look at what's happening there. Operational expenses remained pretty similar. Operating income did accelerate a little bit. Diluted earnings per share did also accelerated slightly, but pretty much remained the same. So I want to see what the trend is on a quarter basis, but also too, when taking a look at the previous fourth quarter, we can see that Q4 of 2025 had a revenue acceleration of 78%. I'm looking at right here. And then Q4 of 2024 was up 265%. So as you can see, the 2 year stacked growth there, comparing Q4s, right, to 265% all the way down to just 78%, that's a pretty large decline there. And so really what the market is looking for is this whole narrative that, AI is on an unsustainable path or the value isn't being recognized on the timeline that Wall Street wants, which, in my team's opinion, AI, it already is changing a lot of different things, right? And it's happening at an accelerated pace. And you can see this with the crazy disruption that's happening in the labor market right now. But really, it's like, how do you quantify that as well as really quantify that looking forward as well? So, um, yeah, we'll see what happens. You also have the tariff wrench that's being thrown in there too. So we'll see what happens here. Um, all that really matters, though, in terms of the market reaction, is what is expected versus not expected, right? And so, yeah, I actually didn't bring that information up beforehand, so shame on me. But maybe we can just look this up live. Let's see, Q4 2026 NVIDIA earnings expectations. um, let's see. Let's see the consensus here. It's pricing in that it's going to move 15% higher. Okay. So we'll see what happens there. Okay, so it's projected to be 69% year over year, right? So which is a slight increase, but still remaining relatively flat. Definitely lower than the previous, Q4, which again was at 78%. So, yeah, we'll see how that comes in. Of course, if it's higher than 69% on a revenue basis, the market will like that. If not, it doesn't. Even if it is actually better than expectations, sometimes if it's not as good as what it wants it to be, it'll still go down. So it's really hard to just determine these things. So that's it with NVIDIA here, but we're just seeing a pretty decent bounce across the board from things that have been going up a lot, mainly with consumer staples having a little bit of a dip here. Looks like it's being bought up into the close. Real estate, industrials, energy, all of which had some buying opportunities here today. And things like tech, financials, communications, all these things that are bearish are just having bounces. XLU, man, that thing does not care. That thing just continues. Great time to sell some if you guys own some utilities. As we can see, volume here is decelerating on this bounce up to the top end of the trading range. A key sell signal or sell some of it signal. Definitely not a buy signal right now with XLU. So if you missed that boat, do not chase here. That's not financial advice, just reading what our process says to do. Um, yeah, home builders, interesting little buying opportunity here. We'll see what happens with that coming up. Pretty wild swings is what this ETF is known for. But yeah, when taking a look at some of the real time ratios, we're just not seeing any type of major structural change, right? Really, you just had volatility near the top end of the trading range and it's just being brought down, right? So the market likes it when the VIX is coming down. And so that's what we are seeing currently. Bond yields continuing higher. Well, not continuing higher, just having a little bit of a bounce. When taking a look at the target rate probabilities for the March meeting, nothing really changed there. So still higher for longer, although I wouldn't be surprised if this does come down a little bit just because we are seeing some early indicators of disinflation continuing after this little inflation scare that we're experiencing right now. And, that'll further perpetuate the stop go cycle, no landing that we're doing right now that we're in. And so, yeah, I think that this could be potentially, depending on what NVIDIA earnings are, the start to that next go around where people or where a buying opportunity is presented as inflation expectations come back down, right? Because again, that would be the area that Wall Street really enjoys, right? You get rate cut expectations with lower inflation expectations, which means soft landing expectations, which is really what the market wants. And yeah, so we'll see. We'll see what happens here. The market just end up closing. So we'll take a look and review some questions as we start to await NVIDIA earnings here. All right. Hope you're all having a fantastic Wednesday wherever you are. We also got Lowe's earnings here this morning. Lowe's and Home Depot reported here. Lowe's just closed below the low end of the trading range there, and also below the static range that we like to see. So this is an interesting change there with Lowe's along with Home Depot. It needed to hold. Lowe's needed to hold 264 or I'm sorry, 266, basically 267, and it could not hold that level there. So that is definitely an interesting point to observe. That was on accelerating sell volume. And take a look at that spike of volatility there. Yeah. So that was today was a pretty interesting change up from, something like Lowe's and Home Depot. So definitely not buying more of that. It actually provided a couple days of a good buying opportunity, as well as one today Early in the morning, it did go up to the midpoint of our trading range indicator, which provided a great out opportunity. So, yeah, when something starts to weaken trend like that, you don't hold on to it. You just get rid of it. So, I know that there's some sickness going around. Everyone, I hope you're staying healthy, especially those people who are living up north. I know that I'm looking at the Weather Channel, and it's like, man, some crazy blizzards going on out there. It's even cold in Florida here, in South Florida. We've had an unusually long streak of cold weather here in South Florida. It's like breaking records. All right, let's take a look at some of the comments here. Isn't buy and hold the best strategy in town? No, it is not. You should ask that question to the people who never sold before they were about to retire. And then either 2008 great financial crisis hit or 2020 COVID hit. And all of a sudden they found themselves in a spot where they couldn't retire because 30 to 40% of their entire wealth got wiped away in a single weekend. So, or in a single week. So yeah, the reason why you do active management is so that you don't experience those crazy drawdowns, right? Now, if you're someone who's like an 18-year-old or in your 20s, it probably doesn't make a huge difference to be a super active manager of your money. But as you get older, right, into your 30s and even beyond that, and you start to make some money, you want to make sure that you don't experience those large drawdowns, because those are portfolio killers. And yeah, it's all about maintaining that acceleration curve, right? So that compounding curve that you have, there's a lot of free calculators online that you can just use. But yeah, I mean, if you are experiencing large drawdowns like every 5 to 10 years, that is disrupting your potential compounding curve for yourself and your retirement as well as your family's um, portfolio, right? Whatever you're managing for yourself and for your family. And so if you're able to avoid a lot of those large, crazy standard deviation moves that happen in the market every once in a while, um, and continuously, compound your wealth. I mean, you know, that's how you're going to be able to preserve yourself. So that's the difference between buy and hold and active management. Okay. Hey, does your macro mastery challenge teach your thought process, looking at a framework to execution and idea generation? Thanks. Yeah, CTCW00. That's exactly what we do. Not only do we go through and show you the language of macro, right? So basically, it's a whole other language set. Learning macro, all these three-letter acronyms, how to use that data, but then also as well, we have our own process where we take that data and we then perform an execution on how to actually make money from that process, right? So if you're looking to incorporate a framework like that, ours has shown huge success over the past 5 years, and so I'd highly recommend you check that out. And yeah, that's what the challenge is for. Are you bearish or bullish short term? On what? Do you mean like the general market? Do you mean the S&P 500? Do you mean commodities, gold, Bitcoin, SPY? Yeah, the S&P 500 just went bullish again in our model. It keeps flip-flopping. But yeah, so on this close here, Yeah, it's back to being bullish trend. Um, yeah, I mean, it could continue as a higher likelihood of continuing higher from here. So, but as you can see, the top end of the trading range is right at that point that's had now three attempts of trying to break through it, which is that, $696 level. Um, it tried it on January 12th of this year and failed. It tried it again at the end of January on the 28th and 29th and it failed. It tried again on January 2nd and failed. And then it tried again February 2nd. And then it tried again on February 11th and failed. So, yeah, that's proven just looking at these lines here, a pretty big level. So, but as it accelerates here and is back into bullish trend, there is a higher likelihood of it going above it, right? Notice that, like, I'm not guaranteeing anything because I can't guarantee something. I can't know the future. All I can do is talk in probabilities, and that's how we want to set up our positions, right? Do you see SOXL breaking out? What is that? Semiconductors, 3x bullish. Um, I mean, it's already breaking out here. It's making a new all-time high. So I would say that it's already breaking out. Yeah. What's in this ETF? NVDA, Taiwan Semiconductor, Broadcom, Micron. NVIDIA and TSM are the two big ones, as well as Broadcom and Micron. Yeah, TSM has a lot better trend than NVIDIA. So makes sense why it's doing so well. Yeah. Yeah, but that's pretty much all I have for you guys here today. Again, we continue to just see this rebound and a lot of things that have been going down. Um, so yeah, we'll see what happens here post earnings for Nvidia, but that's all I have for you guys here. Which internationals do I like? There's a bunch, you know. Um, there's a lot of different international stocks that are or international markets that are doing well just because emerging markets have been receiving just a ton of positive flows, right? And so, yeah, if you just take a look at a chart of EEM, you can see this, right? But yeah, I mean, Brazil, Mexico, Canada, yeah, all of these are just doing pretty well. UK, a lot of international markets are in bullish trend right now. Okay, with that, we're going to go ahead and wrap it up there, everyone. I appreciate everyone for joining. Good luck out there, and we will catch you in tomorrow's daily macro update. Bye, everyone.